The rollout of the 1099-DA form is being staggered over 2 years. And the first rollout is going to be for the tax year 2025, which means you won't see a 1099-DA until January, February of 2026, but it'll be for the 2025 tax year. The 1099 form is going to have your address, your taxpayer ID number, typical information, but it's also going to state what was sold. Let's say it's coming from Coinbase. It's going to state that you sold so many coins of a certain type and what the total amount of money you received from that was. If there is a trade, let's say you took one coin and switched it for another coin, this form will also state what you received instead. So if it wasn't cash, or fiat as we call it, it's going to state the alternate coin you got. So they're going to see both sides of the trade, okay? Very big. And that's going to be listed on that form, and that's the form that you, for 2025, that you start to get 2026. There was a lot of uproar about the original draft form, the 1099-DA, that it would actually have wallet addresses in, and they took that off. You would think they did something nice. Not really. They're not enforcing the collection of the reporting of the transfer wallet addresses until the 2026 tax year, which would be in the forms that you get in 2027. So what'll start happening here in the second year, this is a phased-in process. In the second year, the 1099-DA will have some additional rows added to it, which will state the transfer a wallet. So if you transferred, say, some amount from Coinbase to your ledger, it will state Coinbase's wallet address, what was transferred. It'll also state on this form what your wallet address was and what the date and time stamp of that transfer is. So over time, this will give the IRS insight into all the different types of wallets that you use. So that's down the road. And it's also going to give the IRS insight in terms of what trades and transfers happen that may or may not be taxable. This all adds to increased complexity of gain calculation, because when we do your gain calculation, we have to calculate that gain, but then we have to subtract off these ones that are already defined in the 1099-DA, so we can make sure that we address all the ones that are unlisted. At first, it will not be reporting information like liquidity pools or staking or wrapped coins. These are not in the initial rollout. But the 1099-DA is going to really amp up the amount of information the IRS is getting. It'll allow them to start doing cluster analysis, to start to find connections between those addresses that they know about and addresses maybe you haven't told them about, and they're going to start to get a better and better picture. It's so important that if you're a crypto investor, the time is now to get current. If you haven't been filing your crypto taxes in the past, call our office. We have a magnificent package called Tax Shield. Go to CryptoTaxAudit.com/Tax Shield. And part of that is initial risk review, where we can lay out a plan for you in terms of protecting yourself.